All right. So the first stock that I'm going to look at is Target. This was nominated as a stock to take a look at. And Target, I'm sure most people know, is a big retailer. My family, we tend to shop at Target. It has a good assortment of things to go buy for the family. And it's a very well known company. It hasn't done so well for the past 12 months. It's actually down 1%. It does pay a attractive dividend at 3.2%. And analysts do believe that it's a little discounted, but the performance hasn't been good for 12 months. Over the 5 year, the performance has not been good. For, I would say, 4 years, it's really been a dog. But is it going to come back? Are they seeing growth? And do I think it's going to be more prosperous in the future? Well, let's look at their fundamentals and see how they're doing. First and foremost, we got to talk about revenue. Are they growing their revenue? Are more customers coming to Target and buying products? Once customers are there, they buying, filling up their shopping baskets with more products. Now, for the trailing 12 months, just very modest growth, very light growth. When we go into the quarterly, last 2 quarters, they have small growth. They are a big company, but they're just barely growing. It's important for them to start growing. If they can grow 4, 5, 6%, it'll make a big difference. I think it'll really have a big impact on their overall profitability, a big impact on their cash flow generation, and their stock price will rally. Right now, it's just a slow grower. The good news is it is growing positively the last 2 quarters. When I look at their margins, this is a retailer, so it's not, overly impressive margins. Gross margins at 28%, which is a fair margin. They're retail. Not my favorite industry, by the way, but that's what they have. Free cash flow, $4.5 billion. Now they're a slow grower. Cash flow, $4.5 billion. The best, and it very well-known name. It's a very, very well-known name, very well-known business. I would say they're worth $75 to $90 billion. And I would say that's before I look at their debt. So looking at their market cap, it is priced quite attractively at $63 billion. I think there is some meat left on the bone, so to speak. I think there's some upside potential for Target. I think it's discounted by a certain amount. Let me check their balance sheet just to make sure they don't have too much debt. They have about $19.8 billion of debt, about $3.4 billion of cash, so about $16.4 billion of debt. Their EBITDA is $9 billion per year, so balance sheet's strong. They are a strong business. So this is a very safe stock. I think it's priced well. It's priced at a discount. I agree with this expectation that it's discounted by about 15% that analysts are putting out there. If an investor is looking for a dividend paying stock, that's a pretty safe stock. Target's a pretty good option. It's not something that I'm looking for. I'm looking for more growth and something that's going to accumulate wealth by increasing the stock price substantially. And this stock hasn't proven that over the last 5 years. And I'm not overly excited about retail businesses. So Target, I think, is a good stock for an income investor that wants a safe stock, a stock that one can understand quite easily. It's a retailer. You can go into a Target and buy products. I think their assortment is rather good. I find myself in a Target usually to buy things, and my wife shops there quite a bit. So Target is a good company. Stock seems reasonable.